I found the best advice going to the bar after these conferences and talking to the people that go to a lot of them or in the particular program and ask them, what's good, what's bad, and started from that.
Ladies and gentlemen, welcome to another episode of the Keeping It Real Estate Show. My name is Dan Breezy. Today we have a special guest, Brian O'Neill, with us. He has been a successful entrepreneur for the past 16 years and holds a degree in construction management from Cal Poly. He's owned 3 companies with $30 million in revenue and currently owns Passive Capital Partners and O'Neill Development. Brian is a limited partner in over 1,000 apartment units, 400 self-storage units, as well as a general partner in 521 apartment units and numerous oil and gas wells. Brian, welcome to the show.
Thanks for having me, Dan. It's great being here, seeing you.
Yeah, excited to have you on. Brian and I got to know each other at a real estate investing event years ago, and just did a deal together, and excited to have you on, Brian. Known you for a little while now. I think it's interesting to hear your story, of what you were doing before you started being a real estate investor and how you owned 3 companies. So maybe if you don't mind, give a little background on how did you end up owning 3 companies? Because you're still a young guy. How did you get to that level? And how did that all start?
Yeah, I'll try to summarize it quickly, backstory. But basically, my dad was a dentist and, he worked really hard and did really well. And he wanted me to become a dentist coming out of high school. And I was like, one thing I noticed with my dad is that whenever he takes time off, he's always stressed because even though he makes great money, when he's taking time off, he's literally paying his staff and his rent to sit there at his office while he is taking vacation time. So that's originally sparked me. If I need to build something, before I knew what entrepreneurism was, right? We didn't know a lot of people owned actual businesses. So I put that in my head. So I always like to build things. Even as a kid, I built forts with drywall and electricity in them when everyone else was building little things. So I went and got a degree in construction management from Cal Poly, which is sort of just how to manage large construction projects. And I went and worked for a national home builder. And that was in 2006, 2007. So we know what happened in 2008. And I had on the side been doing a home technology company that I originally started just sort of as a joke. My dad was building another house and we couldn't get a vendor to give us an account. So I went and made a fake company and rented a room at Regis offices and rented one of their conference rooms and convinced the vendor that was a real company and to give me an account. And when the housing market started to crash, I took that side gig and went all in on it and basically started this company that did what we now know as today as home automation and home technology back in the day before the iPad even existed. So we ended up focusing in on the market when things were falling apart, remodels and people buying stuff out of foreclosure. We focused up in on the Tahoe and Truckee area, which is a lot of high-end luxury estates. And I built that up for 15 years and turned into a great company, but I ended up building myself a job. I didn't realize it because I didn't have any examples and mentors or guides of how you're supposed to build a company. So I kind of built it around myself. So 10 years into it, I got kind of discouraged. I tried to, read the E-Myth and grow it and take myself out of the center and added more salespeople, more managers, more overhead, and I made less money. So I was sort of like, I didn't really figure it out how to remove myself from it. It's because it was also a very specialized industry. So I decided to look around me. I had some friends that owned restaurants and a buddy that wanted to expand. And he was off, on weekends. His employees were running the place and he wasn't worried about anything. So he was going to franchise it. And I decided to jump in on that. And I became a restaurateur on top of it. So I owned 1 restaurant and I ended up owning 2 restaurants. And at one point had 3 companies and was just like, what am I doing? I have over 100 employees. I still haven't figured out totally how to get myself out of the center of it. Around that time, I got married and had kids. And we decided that we were living in Northern California and I didn't choose to live there. I was born there and it doesn't really agree with me politically and just how things are there. And we're going to move. And we decided that we were going to move. But one of the things we business is it's hard to move. It's not like a W-2 job where you just, I'm putting my 2 weeks notice and find another job. I have all these assets. That's the other thing I came in to realize is I was making good money, but the majority of my wealth is stuck in these businesses and they're not easy to exit. People say, oh, just sell your business. It took one business 2.5 years for me to finally get it to sell. Not because it wasn't a good business, just it's hard to sell small businesses and get banks to agree. So the long story is that's sort of how I got to the point where I had sold all my businesses and I had moved. And I think around the time when I met Dan, we wanted to move to another state, but we had never visited Texas beyond like a week, or Tennessee or Idaho. So we decided when we sold the house, we bought this giant 45-foot monster fifth wheel, and we drove it around the country to every state that we thought we might want to live in. And we'd stay there for at least a month. And we would boondock, or we'd stay in RV parks, or there's things sort of like Airbnbs for RVs where you stay on people's properties. You get to know, people in Arkansas and people in Tennessee. So we did that on and off for, I think, a year and a half, until we finally figured out where we wanted to land. And we're now actually in Utah, which wasn't even on our list. So that's sort of my backstory of how I went from 3 companies to where I am now. And I wouldn't have sold those companies, honestly, if I wasn't planning on moving.
Wow, what a story, Brian. I love that. So you come from your dad's a dentist. You see stress, which is interesting to me because I thought dentists' lives were pretty darn chill, but maybe it sounds like you own the company, huh?
Yeah. Okay. They are chill, but they have, every hour they work is how they produce money. If they are not working, they're actually losing money. That's what's interesting. They're actually losing money when they're not working, especially if they own their own practice. So it's a quintessential trading time for money. It just happens to be a good amount of money.
Yeah, right. I mean, I could see that too. If you're realizing that you have to be there or you're losing money, now you're addicted to the job. So you start this company and you build it to be a pretty large company. How did you go about being like, yeah, you said 107 employees?
I think between all of them, we got to about 100.
How does that happen? How long did that take to build, from nothing to 107 employees?
Most of those employees were honestly in the restaurants, because how restaurants work. They just have a lot of employees. My first company, we went years with me, 2 installers, and that was it. And then I started adding a salespeople and a manager, and maybe that company got up to 10 or something like that. And it made good money, but I was in the exact same position my dad was in, which was, if I didn't show up to work, we weren't making money. The thing was going to fall apart, which is a quintessential entrepreneur issue, is that you build these companies, but they don't truly stand without you.
Yeah, we were at Business Mastery not too long ago with Tony Robbins, talking about the stages of business. And if a business still needs you, you're still in, I think it was a teenager or young adult stage. And until you transfer over to that mature stage, you're needed in that business. So you're trying to get out. You're stressed. You're like, this is more work than I signed up for.
So I started looking for different businesses. It just happened to be that restaurants came up. I know restaurants have this horrible stigma around them. They actually make really good money if you run them well. They're very easy to systematize. So the first restaurant, I had just a copy of what the guy I had partnered with gave me, which was the same model of being stuck in the middle. When I did the second one, that was probably the closest I got of the 3 businesses to truly being an owner instead of running it. Like, I intentionally did not have a key to the place. I did not know how to use the computer system. Someone else did the bookkeeping. Like, I didn't want to know how to do it intentionally. It actually worked really good to do that, to intentionally not involve yourself in the details, let someone else handle details, because you can't get involved. And I probably would have continued down that path. The moving states thing is what really required us to sell everything, but it gave me an opportunity. It's not a midlife crisis, even though I was 40, to sort of reassess. Like, when I first moved to Utah, I was, okay, now what am I going to build? To have 6 months of no job, no working, just a break from work and entrepreneurism. And then I started looking like, okay, what should I do now? And originally I knew I had the issue of, I need to make sure I get into a business that doesn't put me in the center. So I started looking at franchises. Like, can I just buy or start a bunch of franchises? Because that's how their model works. They have a systematized process. But I realized a lot of franchises actually are still owner operated. So you have to own 4 or 6 of them and sort of replace that owner operator with a manager. So I also had a big chunk of money that came from selling these businesses. So that's when I started to look at, what should I do with it? And I don't really trust and like using financial advisors. And when I got this big number, when these checks came through, I was like, I don't feel confident managing this money. So I went to a financial advisor that I thought was different. And 6 months into it, I pulled the money back. I was like, no, I have time to learn this. And I don't really feel like you're doing much better than what an index fund would do, except for all these fees. And that's why I started going to conferences. And I think that's where I came across you guys at one point. I was just looking as an LP, limited partner investor, just wanted to learn more about real estate, because a lot of my clients that were very successful from my first company always had real estate. And I just wanted to learn more about it. And I started to meet all the general partners and the people that operate these syndications and apartment complexes and self-storage, industrial. I went to a bunch of different ones and realized, wow, you guys have a lot of the things I'm looking for: the least number of employees, ability to not be in the center of the business. I like numbers and finance and, strategy, and just dove into it and basically decided that that was going to be my next career, my next venture. And I still LP invest, obviously, and I do some things on the side to generate cash flow as I'm building this next venture up. But that's why I went that direction. I don't advise entrepreneurs, if you have a business and you're stuck in the middle of it, just sell everything. I would advise, unless you moved like me, to use it as a cash cow. Make it so you're not investing everything into your business like most of us do. Like, we make good money, but our one asset that produces everything is super vulnerable. Like, even if you have a great business, you can have a competitor come in, something can happen. COVID. I had 2 restaurants in California during COVID. I went from being like, I'm sweet, I'm set, to I'm going bankrupt, to I'm going to be okay, to wow, I can actually exit. It was just craziness.
Wow.
So if you're an entrepreneur and have businesses, and maybe not everyone can figure out how to get yourself out from the middle of it, or sometimes the business you built is too specific, use it to start diversifying into. That's what I did. I was planning to diversify into real estate. I just made that my full-time job now.
Wow. So just to touch on that comment about financial advisors, not a big fan of them. What is it about them? You touched on a little bit. They didn't do any better than a mutual fund would do. Is that really, you go to them and it feels more like a sales pitch, or what has it been for you? What's been your take on those financial advisors?
Yeah, I guess I'll start with the positive side of it, and I see why they exist and who they're for. I'm a nerd when it comes to, I'm always watching the stock market. I'm on all the financial sites. Like, that's every morning. That's what I do throughout the day. Like, I watch that stuff a lot. I don't think they're set up for those type of people. I think they're set up for the type of people that they're afraid to do anything, and they're just letting it sit in the bank, and they just don't know what to do at all. Like, they have no clue that you can just put it in the S&P 500 when you're young and just let it ride. And I think for those people, it's probably better than nothing that you use a financial advisor. What I didn't like about it was, the amount of money we were handing over, it was actively managed and all these fees. And when I look at the stocks that are being picked, and if you read deep into the contract language, they were basically predicting that they were going to beat the S&P 500 by like 0.05% was the model. Like, why am I paying all these fees if that's what you're going to do? And then they try to, that there's the pitch, if you die, your wife can call us and we'll manage everything. It's like, okay, but that's not worth the fee. And then there was also a lot of restrictions. Like, I will admit, he introduced me to oil and gas investing because of some tax advantages. And I later realized that there was a load on these investments where he obviously has to make money, but the price I was paying versus what he was actually getting for it, he's getting a kickback on the back. And I could just go direct. I ended up going direct with the same company. And also, I wanted to do more than 10% in oil and gas. And he said I couldn't. I was like, well, why? And he, rattles off some regulation that sounds official. And it turns out that's simply his brokerage that he works under doesn't allow them to do more than 10% in alternate investments, which would include syndications. So if I go through him, I cannot do more than that. And that's what broke the camel's back. I was like, no, I don't want to be restricted by some policy that requires me to put money into the stock market through you guys instead of other investments, which means you're not offering me all the options. And that's what I realized. What I'm being offered is he's a fiduciary, but a fiduciary only in as much as what he's allowed to offer through his brokerage. And that's what kind of pulled me away from it. I wouldn't say that they're bad in general. I think they're good people and they follow a model, but it's still a business. They're making a lot of profit off the money being invested. If you have no clue what to do, go for it. But I had the time and I realized, I can manage this. And that's why I pulled it away.
That was about as good of an explanation as I've ever heard of a financial advisor. And it's a good look for folks who are thinking about it. And I think most of our listeners don't necessarily look and need and want to work with a financial advisor. They're a little bit more, let's do it and figure it out and manage our money ourselves. So that's awesome. So going into real estate, all of a sudden you hear about a conference, you start attending these conferences. How did you even hear about it? What led you to it?
It was actually taxes. In California, with my business, we're doing amazingly well the last few years before I sold them. And the tax bills were I was in the top tax bracket, just getting nailed. And I didn't have a great CPA at the time that was really advising me what I should be doing to, avoid some of that. So I wasn't doing investments that were helping me offset some of my income and things like that. I didn't even have a 401k. Not that I actually want a 401k, but I didn't even know I should, if that makes sense. I think I probably was following David Perez, which is a tax advisor guy that is online, and he just puts out a lot of content. He started mentioning real estate and just listening to some of the clients that I had, honestly.
Mm.
And I think I just started searching for real estate conferences, and I went to, some of them are they're pitch fests. They're trying to get you in to sell their product or their training or things like that. But you can go and listen and talk to the people in the room. And I found the best advice going to the bar after these conferences and talking to the people that go to a lot of them or in the particular program and ask them, what's good, what's bad, and started from that.
Yeah, that's some really good advice, you guys. You go to these conferences and it's hard to know what's really real when you hear the speakers talking from stage. But if you can talk to people who have been in these events or these conferences or these groups for years, they're able to tell you real blunt about how it's been for them, what's worked, what hasn't worked. So that's really great. So what I think about with your story, Brian, is in 2020, 2022, you had restaurants, and here you are in 2024. And now you have 520 units as a general partner. You've transitioned quick. You seem to move pretty dang quick. What is it that allows you to move with such speed, but yet you've found success in what you've been doing? What do you think that is? Where is that? What is that about you?
I still think it's the entrepreneurial risk taker side, because some of it is I'm taking strategic risk, if that makes sense. So like $50,000 is a lot of money, but in the scheme of selling your business, I can do a lot of $50,000 investments and sort of test the waters. And if one doesn't work well or something, I'll be okay, basically. So my sort of original method was to not go big. I did go big with a few people I probably shouldn't have. The investments were fine, but I started just feeling it out. Like, hey, I like this person. They seem to meet my criteria of just the sniff test, if that makes sense. Just, I feel like entrepreneurs have a pretty good gut. If something just seems like I'm being sold, like you shouldn't have to be sold into an investment at all, in my opinion. Like if you feel any salesman feel at all, then I'm like, no, I'm going to pull back from that. And it's not hard once you go to these conferences and you start, part of some other groups like Raise Masters and things like that, where everyone in this is in some sort of investment and they're sharing knowledge. That's what's really interesting about this industry, is that doing restaurants or construction, you're in your own little silo. Everyone sees you as a competitor. You're not going to get very much industry insight or what works or what doesn't, or advice. Maybe from someone across the country will. You can go to one of these national conferences once a year for 2 days and sit in some room and talk to someone about the construction industry or about the restaurant industry. But you can't just go down the street and talk to your competing business and ask them, what's working for their insurance and what isn't. They're not going to try to help you. They're trying to beat you. So in real estate, yeah, everyone's competing over properties, but information is not being siloed as much. So I feel like you can move quicker by just getting around people. You can listen to podcasts. You can sit on tons of free Zooms and webinars. I mean, you can go sit on Neil Bawa's free stuff and he'll have guest speakers come on. And yeah, he wants you to invest with them, but the information, like on this podcast, the people you bring on, there's a lot more free sharing of information. I feel like it allows you to move faster.
Yeah, I'd agree. You hit on a point I think that's so powerful that I want to just hit on again, is when you went to these events, you'd feel it out. You'd get to know people. And I think this is important, where you got to know yourself, what your core values are, what you stand for, what you believe in. And as you go to these events, you'll start to connect with people. And, for me, I've been to a lot of events over the last 7, 8 years throughout the whole country. And you go to these events with, 100, 150 people, and there might be only 3 or 4 people where I'm like, I don't know what it is, but there was something where I definitely want to dig further and see if there is synergy there. And I think that's beyond the education and all the content you're going to get, because if you're in a solid group, you're going to get great content all day long, but you're going to get the relationship connections that you're going to need to hopefully help move the needle to take the next step, because this is a relationship business, and the people you work with, at the end of the day, Mike and I at Granite Towers, we can only do what we can do with our relationships with our partners and our investors. So I think that point is huge and something to tune into in anything business wise, but specifically if you're being a real estate investor, when you're going to events, is just tune into your inner gut of, hey, this person, I think there's something there. I want to figure it out a little bit further.
As I've met people, like if I'm looking for a more aggressive investment, more speculative, you can tell after you've been around someone, listened to them talk, even if it's on a podcast, sort of how they will probably handle an investment like that. So then you have a better gauge of what that investment is like based on the person. Like I in particular am fine with some more higher risk investments that have a higher payout because I'm younger and I'm not going to put all my eggs in one basket. But for example, if my mom, who's, much older than me, obviously is going to do an investment or often recommend something to her, it's going to be completely different than what I would particularly do. And she's going to be attracted, I think, to a different presentation and philosophy and just feeling from someone. So you can just sort of feel people out. I pitch decks are great. And if someone's on stage, that's great. But you got to spend some more time with them somehow. If you can't do it in person, do it on podcasts and phone calls and just move slowly, maybe do a smaller investment, see how it goes, learn what you're supposed to be getting as far as communications and what problems are normal, what problems are caused by the people running your investments. And yeah, you just got to learn basically and learn from other people. I'm amazed how many people will offer advice.
Yeah, I agree. So you're now transitioned out of the restaurant, you've traveled around for a year, you're a general partner in a couple of these deals. What's your goal? What are you looking to do over the next 3 to 5 years? What are you trying to create?
So I'm doing two things. So for personal, I also do short-term lending. That's just like a side thing, which I don't talk about a lot. But basically, I take a joint venture with someone that does a fix and flip or is trying to buy a small apartment complex and needs some of the funds up front for a short period of time. That generates sort of some cash flow for me to help pay bills and just smooth out the fact that I don't have a normal paycheck anymore. But what I'm trying to do is basically what I've done the last 2 years is I'm a business owner who was trying to figure out where to invest my money outside of the stock market and outside of an investor, a financial advisor. And I really want to focus on those business owners that are in the exact same spot that I was, which we're doing great. We built a great business, but we put everything into one basket. And now we got to figure out what to do. We're 40, 45 years old. We got 20 years to go. Do I double down and keep growing these businesses? Or am I okay just leaving the businesses where they are and just take that profit and start putting it into other things outside of your business that you can't even become involved in? You can't go try to run whatever you're invested in. And I think that's a good backup plan to business owners. You should always want your business to thrive and sell it when you go to retire. But you also should probably not put all your eggs in one basket. And I think there's options outside the stock market. That's what I found. I made a bunch of money in the stock market, but also lost money in the stock market. You're supposed to set it and forget it and put it in there. But I was always trying to, Tesla's doing this, I'm moving money around here. And I ended up just like, what am I doing? Like, I don't have control over how many cars Tesla produces, but it controls my investments. So I wanted to be involved in something that was more, I understood it was very simple how it works, or I could be involved in. So my LP investments, I understand how it works. I understand how my investments work in oil and gas. I understand how self-storage works. And if I want to get more involved, that's where my GP pieces come. I basically want to bring that message to more business owners that were where I were and realize that you don't need to throw in the towel and figure you're just going to be stuck. There's a lot of business owners that I think are stuck in their businesses. They call it the hamster wheel. And it doesn't mean they're not making great money. That's the thing. And that's what keeps them there, I think. If you can make great 6 figures in your businesses, you're not going to leave them. You're not going to quit. But at the same point, you're not always happy because you always worry about it. You go on vacation for a week and turning off your phone and like not worrying about it isn't an option. You have to always stay in contact with it. And I think there's a middle ground where you can grow out of that to where you're not relying on your business for your only income, your only retirement.
Yeah, gotcha. So when you're helping those investors, 40 to 45 years old, business owners, what assets are you looking to help them get into? You have, obviously it's apartments, anything else, or is it just apartments?
I only ever want to recommend or advise anything to something I really understand. Like I'm in other things, I'm in oil and gas and things like that, but not to the point where I consider myself an expert enough to be able to bring those to someone. For example, we just partnered with Mike and Dan at Granite Towers. Like I understood that deal. I offered it to my mom, and that's how I knew that I was confident enough to bring that out. So I'm an introvert for one thing. So doing podcasts and even telling people what I'm doing or how I'm making money feels different to me, I guess you would say. All my businesses, I've always been the guy in the back. Like the logo was the company. Most people didn't know who owned it, basically. Very few people knew who owned most of my businesses. And this is a transition for me, being the front face. So when it's attached to my face and my identity, I want to be very, very particular about what I'm offering. So right now I'm just doing multifamily because that's the one I've spent the most time understanding. and feel most confident in. I have the most time in investments as well. I've invested a good chunk of my money in a lot of different operators so I can kind of feel and see how the industry works the most. And I have confidence in it. Honestly, it just makes sense demographics wise. You look at the trends of how, people smarter than me that invest, there's a big push towards multifamily, and it's because of the same reason that you guys do it. It makes sense with housing and demand and growth markets.
Yeah, gosh, and I can add to that in the sense that you will learn so much when you obsessively go down a path. And we could talk about a lot of criteria with buying, and we could talk about a lot of the lessons we've learned. But if you can get with somebody who has gone through some of the pain and has got the lessons, or has been mentored by somebody who has got the lessons, you can collapse your time frame. So if you want to be the general partner, that's one thing. But if you want to invest and ride along with somebody, ideally they've put in a ton of time and effort to bring you an asset that they're saying, hey, this one has the potential to be great. Because the best deals are going to go to people who are obsessively in the industry. You're not going to show up in Dallas and buy a deal that most people would like to buy. Maybe now if you can source an insane amount of equity, there's a possibility you could get a really great deal because there's not many people buying. But in normal times, the best way to get into a really great deal is to get connected with folks who've been doing this for a really long time and come in as a limited partner. So hopefully some of these business owners can see that, and they'll come along with you, Brian. I'm sure of it. Want to touch a little bit about, you've had a lot of time as an entrepreneur already, being 42 years old. What would be some of the biggest lessons you could share, or maybe even biggest mistakes that you say, I wish I wouldn't have done?
It's funny because when I was first starting out, everyone always said, find mentors, learn from mentors. And I heard that and I was like, well, how do you find these people? Like, how do you learn from them? Like, I'm going to go find some old guy somewhere in a Denny's that's going to teach me how to be an entrepreneur, because you're not around that circle. Like the circle I was around, I went to, a private high school, and we had doctors and engineers and dentists and stuff growing up. There wasn't a lot of business owners, and the ones that were seemed like the business was so big that there was like, what can I possibly learn from this person? Like, they're not running a small business basically. But man, if you can find anyone, I guess I would advise people that if they're an entrepreneur, I think most entrepreneurs really want to teach what they've learned from their battle scars. If you just ask them, I really think they do. You just got to find them and ask them what they've learn from their mistakes and failures. Like, ask for the war stories, basically. Don't ask for the successes, like how you built this great thing. Like, what were all the things you ran into along the way, and what did you do differently afterwards? Like, when I first started my first business, I spent like $70,000 on marketing. Like, why? I didn't know any different. It was a complete waste. I remember like 10 years later, I threw it all in the trash. These giant stacks of these beautiful, I thought what I needed to impress customers, to get them to give me a bunch of money to do all these home automation things, was these beautiful, I went to like Lexus and BMW and Mercedes, and they had those beautiful full color magazines and stuff that the cars are in. I went to some person and said, I need my products to look like this. And they made me these beautiful things. No one ever looked down. They just throw them in the trash. And it didn't need that. Like, I would have told someone that was going into construction or especially trade, like, don't do that. You don't need a showroom. You don't need these things. But you really have to learn from someone who has experience. I mean, some of the trade groups, depending what industry you're in, are helpful. Some are not. It's hard to take advice, because I think entrepreneurs, when you first start out, you think you're going to do it differently. You know everything, and you're just going to go after it. But really, if you can find someone that's way ahead of you, that doesn't see it as competition, they're going to help you along a lot. And that's what I finally found in real estate, is that I finally realized, like, oh, I need to stop trying to do it differently and just do it the same as the successful people.
Wow. God, I love it. That's something we've found firsthand on our end, is we've met folks that are far ahead of us, that have done far better than us. And you become acquaintance, you become friends with these folks, and they partner with you in deals. And it's great to have them on your team so they can help give you their perspective of what they're seeing. I can't say enough about how much I appreciate some of our general partners who are older than us, who have gone through a lot of the battle scars, your battle wounds, you're talking about the lessons, and they're there to give some advice and gently, bring you back on track if you start to head off in a direction where they see that you could have some problems. I think about Ray Dalio. He says he's going through the jungle. And as an entrepreneur, you're going through the jungle. As you're going through the jungle, you want to be armed with the best people, the people that are going to get you to the other side the safest. And I think what you're talking about, Brian, is exactly that.
The second one would be, try to not be afraid of change, I guess you would say. It's hard because you want to know you get up and working, you do a lot of changes in the beginning where you're not making money. Then you get up and working, and then you're afraid to make changes because it's like, well, I don't want to break what's working. And when we went through COVID, I mean, don't get me started on COVID, but we made more improvements and changes to our businesses trying to go through COVID than we did over the 5 years beforehand. Like we would have to iterate every day to every 3 days. We would come in like, okay, this doesn't work. We're changing this, change this, do this, do this. Like, because it was basically like we were going to go bankrupt if we didn't figure out how to make this work. So there was no risk now of failure or loss. The end game was failure. So let's just try whatever we can. And it ended up, we tripled our profit on our restaurants going through COVID in California with that mindset. We were ahead of everyone in our area, basically, in making changes and being in front of the game. And everyone was basically trying to catch up, basically.
Yeah. So let's touch on that a little bit before we hear your third. How did you know? I mean, you just could see the writing on the wall. Like, if we don't make a change, we're toast. And everybody waited longer to say, okay, yep, I guess we do need to catch up here. I mean, the change for you was that you could see the future was that you were non-existent. Is that right?
Yeah. I mean, I was actually, the businesses were in escrow. The restaurants were in escrow for sale when COVID hit. So we had sold our house. We were out the door. So I was like, just maintain where we're at, just like apartments, like maintain your 90% occupancy and we're done. And that's where we were. And then literally, I think on Tuesday, they closed down all restaurants and our due diligence period was Friday. So all the buyers all backed out. And so I was 1 foot out the door, but our rent on one location was $21,000 a month. And, that location probably had 40 or 50 people. So unfortunately, laid everyone off except for 4 people and froze the bank accounts because that business runs where all the vendors auto deduct from you, and they're continuing to auto deduct. So basically, I just wanted to keep as much cash as I could because I didn't know what my next plan was going to be. And for the first month, we kind of did what everyone else did, not really know what's going on, try to do to-go, try to figure out what people want. And then after that, the landlord was pretty cool the first month, and then it didn't seem like, this was before PPP and all the employee tax credits were out there. It was, how am I going to pay for this going forward to get us out of this? So we had a huge outdoor area, and I went and got the biggest tents I could find. We rebuilt a bar, ran lines out there, mobile bars, put all our stage lighting out there, and just moved the whole restaurant outside. And that was before anyone was doing that. And honestly, we were in one of the most conservative counties in California. And the health department, they're kind of like, hey, if you want to open outdoors, you can. But they didn't say that. They said, we're not going to stop you. And I was like, I'm going to go down fighting instead of going down, with our tail between our legs. And I had decided that if alcohol beverage control comes by twice, that's who controls your liquor license, which are worth, hundreds of thousands of dollars in California. If they pull your liquor license, you're out of business. And that's what they were threatening restaurants with in California. It was they're going to try to pull your liquor license. I decided if they came by twice, I would close. But before that, we were going to quietly open outdoors. If people wanted to eat out there, they could. They wanted to go, they could. And that requires actually a lot of effort on restaurants because your kitchen is empty. You have no food. You haven't restocked any of your supplies. You have no staff. There's all these things you have to get back up and running. It's basically starting the restaurant up and over again. So that took us a few weeks, maybe 3 weeks, I think. We started planning this and getting staff back. If they wanted to come back, they could. If not, stay home. And we had a good chance of timing where we opened, I think, on a Monday or Tuesday. We didn't advertise it. People called. We had a lot of regulars that knew and were asking us to do this. That's why we started it. We knew there was demand. They're like, they would literally get to-go food and go sit on our patio outside and then come inside to use the bathroom and then go back outside. I'm like, what are we doing? So I decided to just move the whole restaurant outside before anyone else did that. And on Monday we opened. And I think on Tuesday or Wednesday, our particular county dropped the emergency declaration. I think they even threatened the governor. There was the whole, political dynamics. But basically, we were in the one county that was kind of like giving the middle finger to the governor. And that kind of gave us the okay, we're going to advertise we're open. And just we had people driving an hour and a half just to come sit on a patio to eat because we were the only few places in the Sacramento area that was open like that of any size. And that just put us on the map. Our videos went viral on Facebook. And, we started hiring bands to play outside because we had this huge patio. So we just opened it up and off we went. But before that, every few days, we were trying to figure out how to do online ordering, family meals, for to-go cocktails. Everyone was giving cocktails in basic little to-go cups with a It was just ugly. I went and found like the company who makes the naked juice bottles, like the nice square ones, and had logos made, like a professional label put on it, and then the little safety click tops, which people liked because they knew no one was tampering with their stuff during COVID. And we just sold hundreds and hundreds and hundreds of those cocktails, and we handmade them, and we did social media videos showing us making them, and just trying to figure out what the hell do you do.
I love it. I love it. I mean, right there, turning lemon into lemonade, keep fighting, take chances. That is what a story. So that's number 2. These are great. Let's keep going. What's your third? If you have it on the top of your head, you have anything else?
Watch whose advice you take. Only take advice from people who have accomplished what you want. Everyone wants to give you advice as an entrepreneur, I've noticed. And most of the people that are giving advice are doing it from their own set of limiting beliefs and what they think is possible. And I really noticed this, the more successful some of my businesses got, and especially when we sold them, we got a lot of more negative comments and advice. I was surprised. And it's almost like people wanted to tell you why it shouldn't work, why what you're doing won't work. And I thought that was some really good advice I heard from it's probably Jesse Isler or someone like that. Basically, only take advice from people who have what you want or have done what you want to do. A lot of times that means ignoring family members. A lot of times family members want to make you feel better and not exactly give you the best advice. Like, should you be taking advice from a family member who's never run a business? Probably not. They probably shouldn't be advising you on how to run a business, but we do all the time. And it's really hard for those people not to give you their advice. You almost have to be pre-prepared to accept it, but realize you probably shouldn't let it influence you.
Yeah. Wow. Be careful who you listen to. I think it's so powerful, and it's so absolutely so critical, especially this day and age. You can get information from anyone who has the results you already want. I love that advice, Brian. I think that's huge. So if we're kind of winding this down here, I like to ask best books or a best book, anything that comes to mind for entrepreneurs that you think, or real estate investors that you read recently or years past, that would be a great book for them to read.
So it would be Ed Milet's The Power of One More. I know a lot of people are mentioning it and reading it, but I'll admit I read a lot, but I usually don't read a lot of like books, like self-help books or guidance books like that. I'll do podcasts, but that's one of the books that I've actually read all the way through recently because it kept my interest, and I thought it was really practical and applicable.
I love that. I've definitely read The Power of One More, and I could not agree more. If you guys are looking for a book to read, go check it out. It is every page is filled with incredible content. It's definitely a game changer.
It's not just business focused. It's like life focused as well. It applies to everything. It's a great book. He's a smart guy.
Yeah, it totally is. So how can our listeners reach you, Brian, if they'd like to get to know you better?
My company's Passive Capital Partners. The easy website is business2wealth.com. And then, of course, I have the weekly podcast, which is Harder Working Money, because that was my goal, was to make the money I earned work harder for me. Awesome.
Well, to our listeners, we want to thank you for tuning in today. If you're ready to start investing in real estate in 2024, head over to our website, www.granitetowersequitygroup.com, and click Contact Us. Fill out the subscribe form. We'll reach out to you to get to know you better and get you in our database. Brian, thanks again for coming on our show and sharing your story with our audience. You're great to have on.
Thanks a lot, Dan. Appreciate it.